What's keeping Hostmark busy today? It's refreshing to finally, for the first time in a while, to get back to what we consider more normal development business. A lot of management contract proposals to help out equity clients is now increasing for us. Acquisition activity with our equity partners. Acquired a hotel in the fourth quarter of last year, currently under due diligence with another property with that same equity partner, and also beginning to evaluate other types of development activity, adaptive reuse projects, and even some ground up construction projects.
What we heard this morning is there is now a great deal of securitized financing available. Interest rates are around 4 on fixed rate loans for decent credits, and while that was strictly limited to the top 25 MSAs probably even a year ago, it's now maybe 4.25 in a secondary or tertiary market. So there's money out there trying to get in. Leverage is going up. Sponsorship is still key, but I think it's good times for borrowing. There are things on the horizon that you have to look at and say pose risk to the success that we're enjoying. The situation in Europe, sequestration. I don't think we're done with that. Economic issues in our own country involving things ranging from lack of infrastructure investment to the more difficult challenges of defined benefit pension plans in governments that still need to be worked out, fixed, and that if some of those things go wrong could have a cataclysmic effect on the economy generally. Having said that, if there isn't a major bump in the economy, I think we have a couple of good years.
Yeah, I think it's hard to have a crystal ball, but we generally, our experience and what we're seeing in our properties generally across the board, and we do have a geographically diverse portfolio and a portfolio that crosses market segments. We are seeing a growth and an improvement generally across the board. It is a market-by-market, street corner business, and there's certainly exceptions to that general statement, both more on the positive side, or perhaps not as appropriately opportunistically good, if you will. There's markets that I think are still challenged out there, and you have to be careful in what you're looking at and understanding really the fundamentals of what are the demand drivers in that marketplace, and what is the forecast for those demand drivers going forward. We want to be careful as to, has that market fundamentally changed? It doesn't matter that it operated a certain way in 2004, 5, and 6. There may have been fundamental changes that would prevent us from getting back there in that particular marketplace.